As December slows for the holidays, developers are focusing on clearing unsold units, with residential transactions expected to hit a 3-month low. What's holding the market back? Let's find out. Hi, I'm Bobo, and welcome back to our weekly recap of Hong Kong real estate. As developers slow down their pace of new launches, only a few unsold units have been released for sale. For instance, 155 units of Novoland's Phase 3B development in Tuen Mun will start selling this Friday. Among them, 69 units will be sold via tender. The remaining 86 units will be sold at an average discounted price of 12,066 Hong Kong dollars per square foot. 10 of these units saw a modest price increase of around 1%. These units are 303 square feet in size. After the price adjustments, the discounted prices range from 3.79 million to 3.92 million Hong Kong dollars, translating to 12,500 to 12,946 Hong Kong dollars per square foot. This modest price increase reflects the developer's conservative approach to sales and may also serve as a strategic move to gauge demand. Meanwhile, at Cullinan Sky in Kai Tak, a 4-bedroom double-ensuite unit with a private lift lobby was recently sold via tender for 73.44 million Hong Kong dollars. Located on the 38th floor of Block 3, the unit measures under 2,000 square feet in size at around 37,000 Hong Kong dollars per square foot. In the same district, a unit on the 5th floor of the Pavilia Forest Block 2 was sold for $5.23 million. This 1-bedroom flat measures 287 square feet in size, priced at 18,223 Hong Kong dollars per square foot. Although the current rental market has entered a slower season, some agents report that rental prices in certain housing estates have softened slightly. For example, in City 1 Sha Tin, the average rent per square foot in November was 42 Hong Kong dollars, down 4.5% from October's $44. Despite this, rental prices remained relatively high. Many estates, whether new developments or older secondhand properties, are offering rental yields as high as 4%, which has made rental income a key driver for investors entering the market during this downturn. At Yoho West in Tin Shui Wai, a mid to high floor unit in Block 3A, measuring 295 square feet in size, was rented out for 12,500 Hong Kong dollars at the end of last month. This translates to a rent of 42.4 Hong Kong dollars per square foot, providing the owner with a rental yield of 4.1%. The unit was purchased for $3.703 million in December last year. After additional expenses, the owner still enjoys a healthy rental income. Similarly, a buyer who purchased a mid-floor unit in Block 1 of Tai Po Center earlier this year is now enjoying a 4.2% rental yield. The 361 square foot 2-bedroom unit was purchased for $3.68 million and is currently rented out for $12,800 per month at 35.5 Hong Kong dollars per square foot. Next, local property agencies predict that overall property transaction registrations in December will decline, potentially reaching their lowest level in 3 months. Statistics show that in November of 2024, Hong Kong recorded 7,693 property transaction registrations, a 31% increase compared to October's 5,868 registrations. This marked 2 consecutive months of growth and a 7-month high, making it the second highest monthly figure of the year. Further, the total property transaction value in November reached 64.255 billion Hong Kong dollars, an impressive 49% monthly increase, also the highest in 7 months. However, Derek Chan, head of research at Recourt Properties, predicts this upward trend will not carry over into December. He explained that factors such as interest rate cuts and the government's market support measures had already spurred a surge in transactions, leaving little remaining purchasing power. Additionally, the Hang Seng Index dropped below the 20,000-point level after reaching recent highs. Market sentiment has also been dampened by concerns over Donald Trump's return to the White House, which could reignite trade tensions, slow interest rate cuts, and strain U.S.-China relations. With these uncertainties, buyers have become cautious, shifting to a wait-and-see approach. Since mid-November, new home sales have significantly slowed and second-hand transactions remain lackluster. Meanwhile, December's total property transactions are predicted to fall below 5,000, potentially dipping to 4,800, marking a 3-month low. The overall market outlook remains unclear, with some owners eager to cash out, accepting steep losses to sell their properties. In one notable example, a unit in Kennedy Park at Central was sold at a massive loss of 23.94 million Hong Kong dollars. The unit, a high-floor unit located in Block B, measures 1,453 square feet with a 3-bedroom layout. It was sold for $43.3 million or 29,800 Hong Kong dollars per square foot. The original owner had bought the flat in 2012 for $67.24 million and over the years repeatedly refinanced the property, suggesting financial difficulties. After holding the property for 12 years, the transaction price represents a 36% drop from the original purchase price. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.